This is Bloomberg Wall Street Week.
The global push into infrastructure, breaking the IPO logjam in tech.
The financial stories that shape our world.
Cutting inflation without losing jobs. Do we need rate cuts? And if so, how many? Investing in a time of geopolitical turmoil.
Through the eyes of the most influential voices.
Ken Rogoff, economist of Harvard. Former FDIC head Sheila Bair. GE CEO Larry Culp. San Francisco Fed President Mary Daly.
Bloomberg Wall Street Week with David Weston from Bloomberg Radio.
Markets hold their breath for snap elections in France and Great Britain. China braces for the U.S. elections, and generative AI continues to drive the U.S. stock market higher. This is Bloomberg Wall Street Week. I'm David Weston. This week, Glenn Hubbard of Columbia Business School on dissatisfaction with incumbents.
We need a good dose of classical liberals like Adam Smith brought back to life.
And Ian Bremmer of the Eurasia Group on Russia filling a power void in West Africa.
The more that Russia is on the ground, the Russians are going to end up also having control over some critical nodes of the minerals that are necessary for a transition energy revolution.
We start with the U.S. economy and some signs that the consumer may be pulling back, as seen this week in the retail sales numbers. And we welcome now our very special contributor, Larry Summers of Harvard. So, Larry, we had the retail sales numbers, which came in lower than expected. Boy, the housing starts were really down substantially. Are we seeing a slowing economy?
We may be, and it's certainly not at the pace that it once was. I think it's a real question whether we're really seeing a profound slowing or month-to-month fluctuations. My guess is this is still in the world of month-to-month fluctuations with an underlying picture around continuing growth. But you can't be sure, and I'd certainly agree that the data has been more on the slow side for the last month or two than on the rapid side.
So last week when we spoke, we talked about the possible economic policies of Donald Trump if he were returned to the White House, because he had floated the idea of maybe having tariffs replace some or all of income taxes. You were not very enthusiastic about that. Since then, he's responded to you very specifically on a podcast called All In, where they asked him about how he responded to your thoughts on tariffs. And he said he respected you. He gave you nice plaudits that he respects you. You speak your mind, is I think what he said. But at the same time, he really likes tariffs, he said, because it shows the power of a country, both economically and politically. What do you make of his endorsement of tariffs as a major tool of policy?
I don't see the evidence for his belief. First of all, the tariffs he proposes are going to be levied against Canada. They're going to be levied against our traditional European allies. If they are a tool of power and intimidation, it seems to me they should be used much more selectively than he has proposed. Second, when you launch a tax, then others respond and the whole thing can spiral. The classic example of a major tariff policy in American history was Smoot-Hawley, and it contributed to making the Depression great. As I look around the world at countries who have seen tariffs as the center of their economic strategy to make a nationalist point vis-a-vis other countries, the examples look like places like Argentina and a number of places in Latin America where it has not been so successful. So I'd like to see what the case is, but this is a case where it's about as universal among economists who study these things that you shouldn't pursue systematic across the board tariffs for long periods of time.
Let's talk about change, because there's an awful lot of things that are changing around us right now, whether it's climate that you've talked about a fair amount, geopolitics, the global economy. There are a lot of changes going at the same time. Are we going through a particularly tumultuous time of change right now, do you think, around us, or has it always been thus?
Here's a sense I have, David. I was fortunate enough to welcome a baby granddaughter, Frances Joanne, into the world when my daughter had my first granddaughter about 10 days ago. So I've been thinking about her life, and it made me think about my grandmother. My grandmother lived from 1900 to 1974. She saw indoor plumbing come. She saw electricity come. She saw first telephone, then radio, then TV, movies come. She saw air conditioning. She saw antibiotics, which made childhood death a rarity. She saw the ability to no longer ride in horses, but instead to be able to fly across the country in 5 hours. My life, almost now as long as hers was. Yours, we've seen a lot of history. We've seen a lot of change. Yes, we've seen computers. We've seen the cell phone. We've seen, yes, the Bloomberg terminal. We've seen more modern financial markets. But I think you'd have to agree that we've saw much, much less change than my grandmother's generation did. I have a suspicion that my granddaughter is going to witness history like my grandmother did. And most importantly, I think we're going to see a step change with what happens in artificial intelligence. As I've said before, the wheel was awfully fundamental, but once you have the wheel, you don't automatically get more and better wheels. Same thing with electricity. But artificial intelligence has the capacity to make better artificial intelligence. And that puts in a kind of upward exponential ratchet that isn't a feature of any other technological change. So my daughter's going to witness seismic change, and the granddaughter is going to witness seismic change. And the issue is going to be, can we manage it so we avoid the catastrophes that were also part of my grandmother's interval on this earth.
Larry, thank you so very much for being with us again this week. That's our special contributor, Larry Summers of Harvard. Markets took a day off for the Juneteenth holiday this week, but in the 4 days of trading, the S&P 500 continued its upward move, adding another 0.6% to end the week at 54.65, which happens to be just above the new median level of 54.50 that our Bloomberg elves are predicting for the end of the year. The Nasdaq was flat for the week as Nvidia took a step back, and the yield on the 10-year ended the week up 3 basis points at 4.25%. To take us through the week in the markets, welcome back now, Sanal Desai, Franklin Templeton Fixed Income Chief Investment Officer. Welcome back. Always good to have you. So give us your take on what the markets told us this week, if anything.
So, what I find really quite interesting is what the markets didn't tell us, in the sense that now it's been a couple of weeks, we're actually seeing, I know that, we talk about big sell-offs, big rallies. We're talking about 3 basis points, 4 basis points relative to what we've become accustomed to in fixed income markets. The last week and a half actually has been pretty stable, despite the fact that we've had data going one direction, data going the other direction. What I think is quite interesting is how little fixed income markets have actually moved. We're largely going sideways here.
So we heard from Larry Summers just now saying he's not sure he can see a trend yet. The numbers do seem to be a bit softer. We saw it in retail sales, housing starts this week. But do you agree with that? Is there a trend you can discern so far?
No, I would agree with him. Here's the thing. There are two things. One is that it is too soon to say that we're seeing a trend. The second thing is, even if we are, we are coming off an incredibly strong economy. We need to cool down a little bit. I would say that the type of cooling we've seen so far is probably generally welcome for the Fed. We have been growing beyond potential now for a while, and we've had more inflation than we need. We've been growing above potential, and unemployment is coming off 40-year lows. We can't expect to stay there. So, this is some slowing, but I repeat, I'd say it's probably somewhat welcome to those people making decisions at the Fed.
So, Sonal, as you know so well, here at Bloomberg, we pay most attention to the Fed. What's the Fed going to think about the economy? What's it going to think about the numbers? Is there any message you think going forward to the Fed right now as we keep waiting about, are they going to cut? Are they not going to cut? When are they going to cut?
You know, honestly, at this stage, the market has accepted that the Fed is not going to give it the outrageous number of cuts that the market was demanding at the start of the year. We're looking at still less than 2 cuts. It's around 1 3/4 so far. Maybe the Fed cuts twice. Maybe it cuts once. The bottom line is, I think what's more interesting in many ways is the total number of cuts, where I think here I'm still not in agreement with what the Fed is forecasting, which would take Fed funds all the way sub 4, not next year, but the year after. Overall, whether we go for 1 cut or 2 cuts this year is almost besides the point. The Fed wants to cut, and I think they will probably have space to cut by the end of the year. I just don't think it's going to be a dramatic series of cuts, absent some exogenous shock of some kind, I'd say. And it's not my baseline right now, but of course, things happen. And I think that's really important, right? To think about where the market is today and where it's come from.
So what about data coming from outside the United States? We tend to focus on economic data here, what's going on with the Fed, but we also have, for example, elections coming up in France and the UK. There are a lot of things going on around the world.
And I think that's actually something, it almost feels the combination of summer and the calm before the storm in some ways, because you're absolutely right. We are seeing political volatility over the pond, without a doubt. And I think the one area where we are seeing it is probably in the dollar. The dollar strength probably does reflect a certain amount of anxiousness about French elections. The UK elections are perhaps more predetermined, and that's coming up in July 4th. And importantly, our own set of elections next week, I think, will probably have the market much more focused after that on the outcome to our own elections. So yeah, political volatility, politically induced volatility is likely to probably go up. And that's something which we're paying a lot of attention to, looking to take advantage of it, mainly.
Sonal, it's always great to have you with us. Thank you so much. That's Sonal Desai of Franklin Templeton. Coming up, the economics behind the hostility to incumbents around the world with Glenn Hubbard of the Columbia Business School.
People are disaffected with the status quo and with the fact that status quo politicians, whether it's in the United States or in continental Europe, are just telling them, life is fine.
That's next on Wall Street Week on Bloomberg.
This is Bloomberg Wall Street Week with David Westin from Bloomberg Radio.
This is Wall Street Week. I'm David Westin. As we move past elections in Europe, India, and South Africa, and toward them in France, the United Kingdom, and the United States, the one constant seems to be large portions of the population very dissatisfied with their economic circumstances. To help us understand where the disaffection may be rooted, we welcome back now Glenn Hubbard of the Columbia Business School. Dr. Hubbard served as chair of President George W. Bush's Economic Council and is the author, most recently, of The Wall and the Bridge. So welcome back. Great to have you here, Glenn.
Thank you, David.
So go right to that question, because a lot of people seem to be very disaffected in the United States, but also in Europe, even India. And yet the numbers, if you look at the numbers, growth numbers, unemployment, I'm not sure why they're so unhappy.
Well, it's a great question, and I think the American people are looking for more than, come on, man, from the White House. They're looking for an explanation. And I think the numbers are right, and they're not being fudged. But under the hood, let's start with inflation. So many people say, well, economists say inflation rates are coming down, but the prices of things I'm buying are still higher than what I'm used to, and my wages are not keeping up. That is a real problem. And inflation stands for a problem of unintended consequences of elites' decisions. And it's not the only one. We did it in globalization. We've done it in technological change. We did it in the global financial crisis. I think average people might be onto something here.
At the same time, real wages are going up at this point in the United States, aren't they? People don't seem to appreciate that.
Well, I think they finally are, but only modestly. And I think people are fearful about the future as well. We're being offered policy platforms, frankly, by both the major party candidates that don't really have growth at the center.
Well, what would it take to get growth?
Well, I think it focuses on getting productivity growth and getting people able to work productively in the economy that we have. And productivity growth is about promoting investment, but it's also about promoting innovation. Rather than massive industrial policy subsidies, why not a lot more money for basic research, for the new technologies of tomorrow?
When was the last time we had real productivity growth in the United States?
Well, right now, we are actually experiencing productivity growth, but the real booms in productivity growth were the period after the Second World War to the 1970s, and then again in the mid-1990s to about the mid of the first decade in the 2000s. There's no reason we can't have better productivity growth, particularly with all the encouraging news about artificial intelligence.
But with both of those booms that you've described, after World War II and then in the mid-1990s, how much of that was technological? How much of it was actually changing the way we made things, which made it much more productive?
Technology played a very big role, particularly in the second episode, but we're on the cusp of very major possibilities from artificial intelligence. The question is, do we have the political will and skill to prepare people for that world? Because the pace of change is going to be very fast.
You understand economics so well, but also understand it from inside the White House, where you were. How do you bridge the gap between what good economics would give you and what the people want? How do you make them want good economics?
Well, I think it's a couple things. First of all, you need to understand why people feel the way they do. A good politician, and I would argue a good economist, is out there visiting with people, trying to see what's on people's minds. And you have to pose economics as the solution to a real problem. When economists love markets, and I love markets, the reason to love markets is not because markets are great, it's because what they produce. And we have to always make the connection between an economic mechanism and really helping people flourish.
Where is that being done well around the world today, if anywhere?
Gosh, it would be hard to find. We have done it in this country before. We did it in the 19th century. We did it in the middle of the 20th century. We have done it. I would argue we need a good dose of classical liberals like Adam Smith brought back to life.
That's fascinating. To what extent is the problem because we've subsidized so much of industry? I mean, we had the great financial crisis, and I think most of us agree there had to be some intervention there. We had the pandemic. I think most would agree something had to be done about an economy that was brought to a standstill. At the same time, we have the government playing in the game a lot more than just refereeing at this point.
It's a big problem. I mean, the clinical answer is it risks misallocating a lot of capital, but the more fundamental answer is government is not good at two things. One, picking winners, which is what this is about, and more important, letting go of losers. The fear is that these subsidies become quasi-permanent entitlements from the state that dull competition. Decades ago, people like Hayek, a great economist, Nobel laureate, had this figured out in his essay on the use of knowledge. You're better off having markets figure these things out with government being behind the scenes, maybe with new technologies, but not subsidies.
As we look at some of the expression I would think of dissatisfaction, maybe even anger. In Europe, we had with the parliamentary elections, some of what we're seeing in polling here. Is it because people think that they see a better route, or they're just so unhappy with the current one, they'll take anything? Because it's not clear to me always that there's a cohesive theory of economics on the other side that makes a lot of sense.
It's a great point. I think people are disaffected with the status quo and with the fact that status quo politicians, whether it's in the United States or in continental Europe, are just telling them, life is fine. I don't really see articulate plans on the other side. The idea that we would replace mushy industrial policy with tariffs is like we're going back to a mercantilism debate from the 18th century.
We talked about some of what's going wrong right now, but you have a piece now out in National Affairs talking about sort of economic models, different models through the years, and why maybe we need a new model. Take us through what we have been through and where we need to go.
Well, the historical debate over mercantilism is one we're living through again today. The traditional response from economists is you need to focus on markets. Yet, as economists, we often make that sound very abstract. And why should you care about markets? The reason is that they are delivering the best outcomes for all of us in the economy. Now, markets don't always work perfectly. The title of the piece I wrote was Markets for the People. When would you step in? You'd step in for national defense reasons, for example. You would step in to support basic research and innovation. But we need that kind of a new focus.
And there are massive slowdowns. I mean, the Great Great Depression, I mean, the Great Financial Crisis, I assume where you would say, yeah, the government does need to step in there. You can't just let the markets bail us out of that.
Well, correct. But let's go back to the intuition economists like Keynes had at the time of the Depression. It was really the notion of the state being a kind of actor of last resort in a true crisis. Really awful events, the state steps in. But now the state keeps stepping in. When does the state not step in? That's not what Keynes had in mind. And it's not even a question about budget as much as it is dulling the competitive senses of the private economy if the state is always going to bail us out.
Is it a question of democracy as well, ironically, in the sense that once the people see that they can get bailed out, then there's sort of an impetus to have their elected representatives bail them out, and people want to get reelected, so you say, let's make sure we smooth over all the rough patches.
Exactly so, except the problem is we can't do it. If you look ahead in the next 20 years of the nation's fiscal policy, we are going to need to spend more on aging Americans. We are going to have to raise spending on defense. No one seems excited about raising taxes. This math doesn't work.
How do we create a society where we have equal opportunity without guaranteeing results?
Great question. I think we need to have a right to opportunity, much as we have property rights in markets. But a right to an opportunity is not the right to a result. So to be specific, a right to an opportunity could be much more support for education, for training, for places that have been left behind, for the government supporting much more in the way of basic research. All of that's very different than a system that says results only matter.
How do you compensate for very large differences in where people start out in the process? I mean, we all differ of where we start out, no matter whether we went to school, where we grew up, whatever. But there are some huge differences here where some people are well behind in terms of their wealth, in terms of their background. How do we make sure that they have an equal opportunity that compensates for what they've been deprived of for generations? For example, the black-white divide.
It's a great question. There are a lot of reasons we have black-white wealth differentials, some of which, sadly, come from public policy errors over decades. I don't think we can fix that overnight, but I think what we can do very quickly is make sure that everybody has access to the same opportunities and have a system that encourages work, encourages wealth building for anyone who wants to do so.
Glenn, through so much of your work, you often come back to education. And education is not just getting a bachelor's degree, it can be trade schools, various education. You talked, for example, about land-grant schools in your book, The Wall and the Bridge. But whenever we have money to spend, we don't seem to spend it on education. We find all sorts of other things. We can have wars we spend money on. We can spend all sorts of money on infrastructure, which is a good and useful thing. I don't ever hear that coming up to the top of the list in the agenda politically.
Well, it's got to, and we've done it successfully at least twice. So the land-grant college movement was a decision by political powers that be that the country needed a different set of skills. We were going from an agrarian economy to a manufacturing economy. After the Second World War, the GI Bill was the same kind of intervention. Today, with globalization, with technological advance, and especially new developments in artificial intelligence, we need that kind of moonshot approach to education, and it's got to come up to the top of the list. Unfortunately, in the 2024 campaign, I'm not hearing it.
No, I don't hear it either. That's right. But let me ask you about that, because higher education in this country right now is under a microscope. There's a lot of criticism of it from all sorts of different directions. Would it make sense to write a big check for higher education right now without reform of higher education? Because not all of us think it's heading in the right direction on its own.
Completely agree with that, but I don't think elite private universities are the problem or the solution to what we're just talking about. Rather, it's community colleges, it's vocational training. That's where we need to be spending a lot of money. Writing big checks to the Harvards and Columbias of the world from the federal government, I'm not sure it's good for that problem. It may be good for basic research or things like that. But yes, our elite universities need to get their house in order and fast.
It's called an admission against interest on your part, coming from Columbia Business School.
Exactly.
Yeah, exactly.
Yeah.
So are you seeing any movement, and it can be just an intellectual movement right now, not even a political one, in a direction you think is constructive in the United States? Is anybody taking a leadership position saying some of the things you're saying besides you?
You do see it in Congress from individuals. Even in the presidential campaign, Governor Haley had a lot of these themes, both from her personal experience as governor of South Carolina and in campaign themes. Whoever wins in November is going to confront these challenges and is using a model that needs reform. So I'm very hopeful these ideas and ideas like them come to bear.
Do you think that it would have any appeal to the masses?
I think yes, because this actually works. You can actually raise people's living standards and their flourishing in their local areas. Tariffs aren't going to do that. Mushy industrial policy isn't going to do that. People are going to look for something different.
Thank you so much, Glenn. It's always great to have you with us. That is Glenn Hubbard of the Columbia Business School. Coming up, what the turmoil in France and in its former West African colonies could mean for investors. We talk with Ian Bremmer of the Eurasia Group.
It's not as if the United States is competing with Russia for influence over these governments. Rather, these are governments that the Americans would rather see out of power.
That's next on Wall Street Week on Bloomberg.
This is Bloomberg Wall Street Week with David Westin from Bloomberg Radio.
This is Wall Street Week. I'm David Westin. When it comes to geopolitics, we tend to focus on Ukraine or Gaza or Taiwan. And when it comes to powers rivaling the United States, we focus most often these days on China. But sometimes overlooked are developments in West Africa, where increasingly the rival is not China, but Russia, with potential economic as well as security implications for the United States. To give us a status report, we welcome now Ian Bremmer. He's founder and president of the Eurasia Group and author most recently of The Power of Crisis. So Ian, welcome back. Great to have you here.
Hey, David.
As I said, we tend not to focus on places like Niger and Chad and Burkina Faso and things. But there's a lot of developments going on right now there that are not particularly good for the U.S. or even U.S. investors.
Yeah, well, I mean, there are almost no journalists on the ground, but that doesn't mean it doesn't matter. And this part of the world does matter. It matters in particular because there are a lot of resources that are very important for industrial processes, especially as we turn to transition energy away from coal and towards batteries, and they require a lot of what we get out of the ground from these countries. But governance in this part of the world is very poor indeed. Explosion of insurgencies, Islamic radicalism, and very poor local governance with a lot of military coups that have happened in these countries. And some of the most authoritarian, most brutal leaders in the world want to turn to a country that'll provide them support for security and not ask any questions at all about their human rights abuses and governance on the ground. And, the best country for that at scale, that's Russia.
Well, and to speak of that, I mean, it's, I guess, a reconstitution of the Wagner Group, now called Africa Corps, that has moved in.
Africa Corps, yeah.
They actually reportedly have some troops on the ground that have displaced some U.S. and French forces.
That's right. In many of these countries, they have told the Americans, the French, to get out after the military has taken over the leadership of the country. And they want they need paramilitaries, they need advanced military equipment, and they're willing to pay for it. And if they don't have hard currency, they can give you a percentage or control or an interest in state-controlled companies on the ground that have access to these minerals. And the Russians are more than happy to do that. Now, that used to be through the Wagner Group. Of course, the Wagner Group quite historically imploded when Mr. Prigozhin, who ran it and had been a very close informal advisor to Putin, turned against Putin. It has since been reconstituted with many of the same people and all of the same weapons on the ground. So if these countries push the Americans out, I mean, the U.S. historically has had a fair amount of interest in what's called the guerrilla belt. And here I mean like guerrilla, the animals, as opposed to guerrilla, the illicit fighters, through Central Africa. And the U.S. has a lot of troops on the ground, has provided humanitarian aid, and is trying to help provide security. But when you have countries like Chad, like Niger, like Burkina Faso, that are run by military juntas that overthrow their legitimate government, the U.S. policy is containment. It's to try to ensure that the instability of that country doesn't spill over into other countries that the U.S. can work with. So, I mean, it's not as if the United States is competing with Russia for influence over these governments. No, rather, these are governments that the Americans would rather see out of power.
Let's come back to where you started with the possible ramifications economically, particularly when it comes to energy transition, because of some of those raw materials that really exist in those countries. Uranium, certainly lithium, bauxite, others. What are the possible ramifications for investors if, in fact, Russia's influence continues to grow in West Africa?
Well, it's going to be a greater cost because, again, these are countries that are going to have resources that will be exploited in illicit ways, in illegal ways, using child labor, for example. They're not going to be welcomed in supply chain by many advanced industrial democracies in the world. And even when they are, the Russians are going to have a preference to ensure that the supplies are first and foremost given to friends of Russia with preferential long-term contracts. China, of course, being the country in that category that has the greatest need for them. And there are a lot of resources here. I mean, the Russian government has secured direct access to, major gold reserves in the Central African Republic, as well as in Sudan, platinum in Zimbabwe, diamonds in Zimbabwe, as well as the CAR, uranium, as you mentioned, in Namibia. Right now, the United States still gets uranium from Russia, and Congress is trying to stop that. They're trying to actually ensure there's money to increase production in the United States and with friends, so that if the U.S. is going to start building reactors again, you've seen the Bill Gates announcements on your own Bloomberg, that they don't have to get it from Russia.
Ian, West Africa has historically been a zone of influence for France because they colonized it. At the same time, Mr. Macron right now is distracted with a few other things closer to home with this snap election he's called less than 3 weeks away now. Give us a sense of what the possible ramifications of this are.
Macron's own party, Center Party, lost historically 17 points under the National Rally far right of Marine Le Pen. And so on the back of that really embarrassing, much larger than expected loss, and by the way, historic, over 50% of French registered voters turned out to vote in this European parliamentary election. That doesn't sound high, but for a European parliamentary election with not much at stake, it's by far the highest that France has ever had. It's a huge embarrassment. It felt like he was going to get censored by the government over the course, by the parliament over the course of the fall. It meant that his budget wasn't going to get through. He wasn't going to be able to continue to be fiscally responsible. So he decided to call a snap election, which in France means 3 weeks of campaigning, and then they go and vote. And the idea for Macron being, if he wins, because you'll have 70% turnout for a parliamentary election as opposed to 50 for the European parliamentary elections, that suddenly his party will do better. He'll be able to scare people away from voting for the far left or the far right. But the left-wing parties have all come together, and they are working to not run candidates against each other in parliament. So that's a big problem for the center. And the average French citizen doesn't believe that Le Pen and her party is a threat to democracy. Only 40% say that they are, compared to 80%, David, 20 years ago. So look, anything can happen, but right now, and we're only a week and a half away, these elections look very bad for Macron, very dangerous. And if Le Pen and the National Rally are able to capture government and her party takes the premiership, well then, anything in the European Union that requires agreement of all the parliaments, she will be opposed to.
Ian, it's always so helpful to talk with you. Thank you so much. That's Ian Bremmer of the Eurasia Group. Just when you think it can't get any worse, it can. So wrote Nicholas Sparks in his 2005 novel, At First Sight. But with no disrespect to Mr. Sparks, it's a sentiment I expressed often and in just those terms when I ran ABC News starting in the late 1990s. At the time, Good Morning America, that was our flagship morning show, was struggling. There had been a series of changes, both behind the camera and in front of it, and each one of them made an assumption that things were so bad that they simply could not get any worse. And each and every time, they did get worse. By the end of 1998, I could no longer tell what was the problem because everything seemed to be. And so we went bolder, moving beyond just not making it worse to actually making it better. We moved Charlie Gibson back into the role where we knew the audience loved him and paired him with none other than Diane Sawyer, the star of primetime news and the biggest audience magnet we had. And that's when things finally turned around, adding almost 25% to our audience overnight. It's one thing to turn around a program. It's quite another to turn around an entire company. Under Jack Welch, GE grew to be the envy of the corporate world as it expanded its reach into just about every corner of the world. But then things turned south and accelerated under Jeff Immelt as the market cap fell from over $450 billion to just over $100 billion.
We had good businesses, good people, good initiatives, but at the end of the day, the stock price lagged. There are some things that didn't work.
Just when it looked like things could not get worse, GE turned to Larry Culp, who, instead of trying to fix the company as it was, decided to sell some parts of it off, pay down debt, and split it into three strong businesses centered on aerospace, medical technology, and energy. Those three companies now have a combined market cap of nearly $270 billion.
I've long believed that you're far better off being strong rather than just big. And that was a little bit of the evolution of our conversation. We're not going to be an all-singing, all-dancing GE going forward.
It's not just television where you can go from bad to worse pretty quickly and requires some radical moves. The Washington Post publisher was concerned with where the newspaper was headed and decided to change the editor abruptly, replacing a veteran female journalist from the Associated Press with a British male investigative reporter whom he promised would restore an even greater degree of investigative rigor to the Post. But after questions about how he'd done some of that investigative work at the Sunday Times, his plans to join the Post this week were scrapped. And trust me, however bad things looked for management at the Post, trying to make a change at the top and failing has got to make it worse. But maybe the most glaring examples of people making bold moves, apparently in the hope that things can't get any worse, is in politics. Prime Minister Rishi Sunak looks to have done that in calling an early snap election in Britain when polls showed his party well behind the opposition.
Now is the moment for Britain to choose its future, to decide whether we want to build on the progress we have made or risk going back to square one with no plan and no certainty.
And not to be outdone, President Macron of France has now called his own snap election in the aftermath of his party's being routed in European parliamentary elections.
He's kind of got a reputation in the past for having taken enormous risks. He took an enormous risk in running for president without an established party. It has left open a wide range of outcomes.
But then again, maybe in politics, sometimes this things can't get worse thing can actually work. Here's then candidate Donald Trump on the campaign trail in 2016.
Over 3,000 people have been shot in Chicago since January 1st of this year. 3,000 people. There's a shooting on average every 2 hours. To those suffering and hurting, I say, what do you have to lose? I'll fix it. Vote for Donald Trump. I mean that. What do you have to lose? It can't get any worse.
Despite his pitch, Mr. Trump didn't win over too many of those black voters by saying they had nothing to lose. He won only 8% of their votes in that election. But then again, we have to remember, he did win the election. That does it for this episode of Wall Street Week. I'm David Westin. See you next week.